Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Investment pledges approved by the Board of Investment surged by 156% to 122 billion pesos in the first 2 months of the year. The number of projects fell by more than a third to 31, but the projected number of jobs from the investments rose by 41% to 10,207. Trade Secretary Mon Lopez said he is confident that the country will achieve pre-pandemic growth rates as the economy continues to recover. Lopez said investment opportunities in the country include manufacturing of e-vehicles, e-bikes, and bicycles, as well as artificial intelligence and light industries manufacturing. He said the government is continuously pursuing reforms such as the Create Bill to foster a better business environment. Lopez said the measure, which is just awaiting the signature of President Duterte for it to become law, would make the Philippines a more attractive investment destination due to an incentive package and other perks under the bill. All right, guys, 1 minute into the open. You can see on my Bloomberg terminal here a bit of a pullback. We are down a strong 0.5% in the first 1 minute of trade, going back to the 6,900 levels. This comes, of course, after we were already close to the 7,000 levels that a lot of analysts are hoping we might be breaking through yet again. And this also comes after the 11th straight day of net foreign selling. A lot to be watching out for here, particularly in terms of the vaccine story. Today, the Philippines is set to receive 487,000 or a little bit over that doses of AstraZeneca vaccines from the COVAX facility, but still we have yet to receive some news on that. Meanwhile, earnings are in full swing. So we did report MPIC earnings yesterday. That was an 81% or 80% drop last year in profit to 4.71 billion pesos. I'm just going to pull that out for you guys in the terminal. But recall that Chairman Manny V. Pangilinan is a bit more optimistic, but they do say that the profit back to pre-COVID levels might happen in 2022 the earliest. So CEO Joey Lim did say in a briefing yesterday that the rebound would depend on several things, particularly the pace of the reopening of the economy and the vaccine rollout. He did mention, however, that the first quarter earnings are looking similar to the fourth quarter of 2020, and this trend could be sustainable. They also mentioned their capex targets 126 billion pesos. That's close to double the capex that they spent last year. Another thing they said is on toll roads. So they did mention that decision, they had, of course, announced that they had sold their stake in Don Muang Tollway in Thailand. They said that decision to sell was made even before the pandemic, but it does not necessarily mean they are exiting that business. On the contrary, they just mentioned that toll road unit is attracting strong interest from possible investors, but they are not entertaining offers at this point. But they did mention a maiden share sale and IPO might be considered once the expansion is completed by 2022. They are also possibly looking at tollway purchases in Indonesia. Now, as for their mining and oil exploration units, let's listen to the latest developments from MVP on their need for a technical partner.
There have been, with the help of an international investment bank, there have been contacts made principally with Chinese mining companies, and a number of them, actually quite surprisingly, a number of them have expressed interest in Silangan, no? And one of them is quite keen to proceed, a rather major Chinese mining companies. Quite hopeful that we will get a partner in to develop Silangan, and of course the metal prices are helping the prospects. No? If we are fortunate to get SC-72 going, we would need the facilities of Malampaya to process the raw gas that will be produced by 72. So regardless of whether we own it or not, we will have to pipe the gas to Malampaya for processing, and then of course Malampaya, the existing pipeline over to Batangas.
Would you need a new technical partner, sir, that would run the facility?
Most likely, yes. Most likely. Because we're not in the business of, we don't have any experience or expertise running a gas field.
Okay, there you have it, guys. So this, of course, comes after or as Felix Mining and First Pacific officially offered to buy the Shell Petroleum Exploration Company's 45% stake in Malampay, and also after they had acquired the Philippine Coastal Storage and Pipeline Corporation last year. Now, another one that is also optimistic, but actually in terms of optimism, even more compared to MPIC when the timeline of the rebound is happening, is DNL. I'm going to pull that out for you in my terminal here. Their CEO sees the return to pre-COVID levels happening already this year. Now, this expectation comes as 2021 earnings, they say, will be reaching the 2.62 billion pesos posted the year before the pandemic. They did mention the non-food segments, which are already 75% of the income, were already above the pre-COVID levels in the fourth quarter already. Food ingredients particularly showing quarter-on-quarter improvements. And, this comes after the DNL stock price actually jumped the most in a month after they had reported 2020 earnings that beat forecasts. In fact, the second half reached 1.2 billion pesos, surpassing the 1 billion peso target for the period. DNL seems to be continuing on that uptrend, up 0.7% to 7 pesos and 49 centavos. And finally, one more earnings to be breaking this morning. This just came out a few minutes ago. That is Semirara, the mining company, that reported net income for the full year of 3.29 billion pesos. That is down 66% year on year. And this comes as the revenue posted 23.3 billion pesos. But the coal segment, which is, of course, the bulk of the revenues, declined 43% in terms of revenues to 16.5 billion pesos. The power segment also reporting a 23% decline in consolidated revenues. SEC, however, trading flat here at 12 pesos and 90 centavos. Meanwhile, you've also got ICTSI signing a lease pack for a multi-purpose terminal at One Port. Just want to take a quick peek at that share price and whether that is moving this morning amid that news. It does seem to be the case. ICTSI up by 10 centavos to 120 pesos and 90 centavos this morning. Okay, guys, checking in on the biggest headlines we're keeping our eyes on. The PSE has proposed changes to the 2007 Philippine Mineral Reporting Code to meet international reporting standards. These proposed changes include a discussion on the mitigation and remediation plans to address environmental, social, and health or safety impacts. The PSE also recommended other revisions, such as the accredited competent person's consent to the public disclosure report and the disclosure of any potential conflict of interest between related parties. The board's operator is asking concerned parties to send their comments on these proposed amendments until March 16th. And this from the Philippine Star, the Labor Department insists that the no vaccine, no work policy is illegal. Labor Secretary Silvestre Bello III says there is no legal basis for requiring employees to get vaccinated before entering the workplace. Bello warns enforcing the rule may constitute as illegal suspension or illegal dismissal. Associated Labor Union's President Gerard Seno told Business World Live on Wednesday afternoon that the DOLE needs to provide proper guidelines for company-sponsored vaccinations. Seno added that while initiatives from employers to shoulder vaccinations of workers are welcome, companies should hold vaccine safety information drive to prevent vaccine hesitancy among their workers. And the Philippine Ports Authority expects a recovery in cargo traffic this year. The PPA says cargo volume plunged by 13.5% compared to last year. The biggest decline was recorded in the ports of Manila, where 85% of the total volume in the country passed through. However, the agency noted that other port clusters in southern Luzon, Visayas, and Mindanao posted minimal decreases, while the northern Mindanao cluster even posted positive deviation amid the pandemic. The PPA told the Philippine Star that for 2022 and 2023, cargo volume is expected to grow between 1% and 3%. The group added that it will take some time before the industry returns to the pre-pandemic levels. So so much excitement over the past few days on an overdue vaccine rollout, but is the government's plan going to be enough? Here to talk about the recovery prospects, we have with us AJ Montesa, Action for Economic Reforms. Good morning and welcome back.
Hi, good morning, Danie, and good morning to everyone.
Okay, AJ, the first big question here, vaccine rollout, some hiccups along the way, but now here we are. Are we on track? And is this going to meet the expectations for recovery?
I think there's still a huge concern over vaccine hesitancy. The latest surveys show that only 19% of Filipinos are willing to be vaccinated and 46% are still unwilling. And I think there's a large concern over Sinovac. As we know, it's still in the phase 3 trial. So a lot of people are still not sure on how safe and effective Sinovac is. And it's the first vaccine that's being rolled out. In fact, many healthcare workers would prefer a different brand of the vaccine. So I still don't think we're in a state or in a phase where we can be confident that the vaccine is going to be rolled out quickly as of the moment.
Okay, so wait and see pa rin, also as together with the rest of the world. Now, all things being equal here, assuming that the rollout continues as planned, and of course that there's no more fiscal stimulus, at least for this year, do you see a recovery underway, and at what point do you see that happening?
Well, I think we're already past the worst parts of the recession because of COVID. So I think we're on our way to a recovery. But if we want to have a good or a robust recovery, we need to continue our spending. The government needs to pump more money into the hands of consumers. It needs to give money to those who lost jobs, for example. And although the government is discussing opening the economy as a way to stimulate it, I think the concern really lies on how people still perceive the risk and uncertainty.
Okay, I think we're losing connection with AJ. We'll try and get back to him. AJ, are you there? Okay, I think we may have lost him. Let's try and take a quick peek at the markets. Actually, let's check in on the biggest movers this morning. You can see on my terminal here the market continuing to slide to 6,800 levels, unfortunately. And you do see just a few bright spots, 7 bright spots. So you can see my terminal here. Robinson's Retail Holdings leading that charges up by 2 9/10%, followed by Aboitiz Power and Bloomberry Resorts. But on the downside, you've actually got SM Investments dragging down the index. That is down by 3.5% this morning. It does seem to be that it's mainly conglomerates leading that decline. So SM down, JG Summit as well down, Alliance Global, NGT Capital as well down. So a lot of big conglomerates actually pulling down the index. So let's take a step back and just check in on the biggest movers, at least in the rest of the region. We did check in on Wall Street overnight, and that was pulled down by the NASDAQ and the tech companies. It was down by 2 7/10% overnight. The S&P 500 was also down by 1 3/10%. Let's take a quick peek at Asia and how that is moving this morning. If it's in tandem with the rest of the our index slide at least, and it does seem to be the case. We do see the Nikkei 225 slumping by 1.5%. The ones moving basically right now, Taiwan also down by 0.9%, and the FTSE Straits Times down by 0.1%. So again, quite a difficult feat here. Let's try and get back to AJ. AJ, are you back with us?
Hi, I'm really sorry for the technical difficulties. Yes.
Absolutely no problem. That happens. Okay, so we were talking about the fiscal stimulus here, and you were saying that we needed more help from the government, so to speak. But the economic managers, at least particularly, Ned, the acting secretary, was saying that if we just reopen the economy slowly, and if we just have the confidence to take the vaccines, we don't need to tap into more debt levels that we might not be able to afford. Do you agree with that?
Well, I don't think it's just a matter of reopening the economy, because even if we continue to reopen the economy, consumers will still face this uncertainty and risk over going out and spending that money. So I still think it's about managing the expectations and the perceptions over the safety of going back out into the economy. So it's not just a matter of reopening, but also making sure that a safe and effective vaccine is out there, it's accessible to healthcare workers and to the general population, and that it's actually safe to go out and spend that money.
Now, apart from the domestic confidence to spend, we're also highly dependent on our trade partners. Some say 40% dependent on whether the global economy will recover. Do you see us benefiting from that, at least in the short term?
Yes, definitely. I think that the world in general is continuing on upward trajectory from where we were at the height of the pandemic. So I think we will benefit from generally opening up of trade. But again, as our economy is mostly consumer based or household spending based, we need to emphasize the need to support the households, especially those who faced unemployment or the businesses that closed.
Okay, and stirring unemployment, speaking of that, we did have the second month of PMI in expansionary mode. Is this something that surprised you on the upside? What are the trends looking like now when you look at, remittance figures, external trends, and even the reopening of manufacturing? Are these enough for you to say that unemployment will be buoyed at least, or taken care of, or at least improved in the coming months?
Yeah, again, I think the general trend is going upwards. I think it meets our expectations that we're going to have a recovery. We're in the midst of our recovery. I think the more important question now is how can the government support that recovery, or how can the government buoy that recovery? And I think we need to pursue further spending. I don't think we should be worrying about debts per se right now. We should be focusing on making sure that the impact of the recessions that we just had don't persist into the future.
Is there still room for the BSP to pitch in and help, given the fact that they've already pulled the trigger on easing rates, and yet we still see the bank loans, at least for the month of January, contracting year on year? So, despite the fact that the interest rates are low, money supply growth is also slowing. What more can they do, especially since inflation seems to be going up compared to the target?
Yeah, on that matter, I think government should emphasize more fiscal policy rather than monetary policy. But I think the consideration as regards fiscal policy is the targeting mechanism. For example, the social amelioration programs. I think the problems that they had there was the targeting mechanisms, how efficiently it was used. So what we need to do is make sure that the money is well spent, it's transparent, and that the money goes into the hands of the households that need them the most. So it's fiscal policy that needs to be emphasized right now.
AJ, do you have a revised projection on our growth this year and the next?
Actually, I'm very sorry because I don't think it's quite easy to project these
I'm
figures
sure
at the moment.
it's not.
Yeah, there's still a lot of uncertainty, but I feel that our growth trend is at least upward. We're already past the lowest points that we were facing at the height of the pandemic.
Okay, so we've hit rock bottom, but as you mentioned, fiscal stimulus still needs to step in if we are to have a more sustainable recovery. Thank you so much for those insights, AJ Montesa, AER.
Thanks for having me, Danie. Good morning, everyone.
And that's the first look into the business day. Today's Thursday, March 4, 2021. Catch Business World Live for the market close. It's 3:15 p.m. today. I'm Danie Laurel, and we are One News.